A stablecoin destabilized, and I want to dig into exactly what a stablecoin is and where exactly TerraUSD falls into it and why it's been so controversial. Let's just kick off about what is a stablecoin. Effectively, these are cryptocurrencies that are pegged one-to-one with the US dollar. The idea is that they're worth $1, hence the name stablecoin as well. Now, people use these stablecoins to trade in and out of other cryptos because they find it easier than sort of uploading fiat to their trading account and doing it that way as well. Two of the main ones here, two of the biggest, Tether and USDC as well. Now, these are coins that are backed by real-world assets, according to their founders. This includes things like cash and bonds, and that's a very key point because I now want to move on to TerraUSD and its sister token, Luna, as well, because TerraUSD, or UST as it's also known, is called a algorithmic stablecoin. This means effectively its $1 peg is regulated by code through a process of minting and burning, and these two are related here. So users can swap their Luna token for UST and be guaranteed $1. So when UST rises above $1, you see people trying to play that arbitrage to swap their Luna token for a dollar of UST as well. And that helps basically to bring down the price of the UST back to its peg. That's because one of the Luna tokens is burned as a result and a new UST is minted, therefore bringing higher supply onto the market as well. But what happens in times of market volatility as we're seeing now? Let's just look at what's happened to this stablecoin price, the TerraUSD price. Look at that, absolutely extraordinary. Dropped to just 12 cents here, way off its $1 peg as well. And that's because it's not backed by reserves. It's very difficult to bring it back to the $1 peg as well, particularly because it's governed by an algorithm. And as a result, the sister token, Luna, has had an absolutely massive crash. It's basically worth zero now. Look at that. That is extraordinary. It's gone from about $86 a week ago down to basically zero. So the question is, what does this mean effectively for the broader crypto markets and in particular Bitcoin? Let's take a look at the Bitcoin price, because over the past week it's down about 16%. It staged a bit of a relief rally today, but it did hit late 2020 levels as well. Now, the founders behind TerraUSD have actually bought about 3.5 billion worth of Bitcoin. That was before the meltdown anyway, of reserves to back this. That has never been done. Those other stable coins have been backed by more traditional assets as well. And clearly, it's not working here, and the fear is that the founders of TerraUSD will dump all this Bitcoin in order to try to maintain this peg, and therefore that could bring the Bitcoin price down. Now, Do Kwon, the founder behind TerraUSD, has said that the plan now is to try to absorb that UST supply. That would involve burning UST to reduce supply and minting new Luna coins. That will happen by a technical upgrade. So that's going to be very hard to enact at this point, and he admitted it will be a high cost to Luna and UST holders, and that's one of the reasons why regulators right now are laser focused on regulating stablecoin. People like Janet Yellen in the US and Rishi Sunak here are talking about how to regulate stablecoins, and that's clearly going to be a big focus for the market in the coming months, guys.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.